Welcome to This Week on Wall Street, your essential briefing into what matters most in markets. I'm Matt Weinschenk, the Director of Research here at Stansberry Research, and let me start today with a little story. It's one way to describe what's happened in the last few months. You could sort of put it like this. The economic order has broken down, stock markets have crashed along with bonds, investors have started souring on the U.S. currency. Now, with the president vocally threatening the independence of the Federal Reserve, the dollar is in free fall. But through all this, a hero has risen. It's a better, truer form of money that has soared, keeping smart investors safe from the chaos. And that all this proves that this type of money is better than a government-managed fiat currency. It's a true store of value when you need it most, and it's got a bright future ahead of it. Of course, that's the situation that's happening right now. And the money that has worked has been gold. Gold shot up to more than $3,400 an ounce. That's up more than 40% over the last year. And I'll note it's 10% higher than last month when I told you that $3,000 gold could just be the beginning. But in some other reality, that story should have been about Bitcoin, right? The digital money was supposed to protect investors against a manipulated inflationary currency. And when everything collapsed, Bitcoin was supposed to soar. But it hasn't. As the dollar has fallen, so has Bitcoin. You can see in the chart, both peaked in January. And as the dollar declined, Bitcoin dropped from over $100,000 to below $80,000. Now, Bitcoin has jumped in the last few days, but that's only because the tariff news has softened and stocks and dollars have rallied. Bitcoin is acting like a risk asset, not a safe haven. Now, before you get all up in the comments, let me be clear. I like Bitcoin. I was mining cryptocurrencies with GPUs stuffed in a milk crate back in 2013, and I bought my car with Bitcoin gains. But listen, we all need to be humble about Bitcoin. It's still a new asset class. We're all learning about where it fits in the investment world. And if you've got a thesis that Bitcoin is the new sound money, and then it doesn't behave that way, you need to sit down and question why and figure out what's happening. So over the course of its life, the story of Bitcoin has changed over time, right? At its core, Bitcoin is a digital money that lets you transfer value without a middleman like a bank. So the first story about Bitcoin was that it would be used to buy and sell things, and that as more people used Bitcoin, it would make its value rise. But Bitcoin turned out to be too slow and too costly and too difficult to use for everyday payments. But that's okay. The focus shifted from using Bitcoin to spend to using it to save. And Bitcoin became digital gold with its value coming from its scarcity, its deflationary attributes, and its freedom from central bank control. Now, Bitcoin always had this rebel, hard money element to it, right? The 2008 financial crisis inspired Satoshi Nakamoto to create Bitcoin. And he or she wrote about how central banks couldn't be trusted to maintain their currency's value. So this has always been a part of Bitcoin's promise. But then something interesting happened. And as the store of value idea grew, the Bitcoin community split into two groups, right? Some loved it as hard money. Others loved it as a way to get rich quick. Bitcoin's price had risen so much that it became seen as a way to get wealthy. Gamblers chased Bitcoin riches, and big institutions considered it a way to earn higher returns outside of traditional stocks and bonds. Now, for the last 5 years or so, the get-rich-quick crowd is winning. If you look at the evidence and the data, it all points to Bitcoin being a speculative asset and not a new form of gold. Bitcoin moves closely with risky assets like tech stocks. It goes up when people feel like taking risk, and it falls when people get scared. It has not successfully protected investors from market crashes, inflation, or currency problems. So the question is, how should you think about Bitcoin today, and can it ever fulfill its promise as digital gold? Well, I can tell you exactly what to do. So first, you can still use Bitcoin as part of your overall investment mix. I'm not going to predict the price of Bitcoin. That's not my job. But I do think about building portfolios, and Bitcoin can improve your returns. Since it can rise so much so fast, you can get a lot out of even a small amount. Now, of course, if you look back and you had held Bitcoin back in 2008, the returns would blow anything else out of the water. But even over the last 5 years, if you took a regular 60-40 portfolio and moved just 2% of it into Bitcoin, it would have boosted your returns by nearly 2% per year without adding much risk. But second, if you want to think of Bitcoin as digital gold, the problem right now is leverage. The Bitcoin ecosystem caters to speculators who borrow so much to invest that the leverage makes Bitcoin move like a tech stock. So you could trade futures at leverage levels of 50 or even 100 to 1. There's special ETFs like the 2X Bitcoin Strategy Fund and the ProShares Ultra Bitcoin Fund that let investors make leveraged bets on Bitcoin with a single click. Or take MicroStrategy. It's a company that's borrowed billions to make a big bet on Bitcoin. And then there are funds that offer investors leverage bets on MicroStrategy. So it gets a little crazy, but leverage makes assets more volatile. Happens to any asset. And when markets get nervous, investors unwind those leverage bets. So if there's lots of leverage in the system, it doesn't matter that that bet is placed on a supposed digital gold. If the leverage is unwinding, Bitcoin will fall. So Bitcoin's going to trade like a tech stock as long as this situation continues. Now, as for the promise of a trustworthy digital gold to protect investors from an unstable economic system, Bitcoin hasn't proven itself yet, but that doesn't mean it won't ever get there. Now, that's why I wanted to bring in Eric Wade. He's our cryptocurrency expert here at Stansberry Research. Eric digs deep into the technology of blockchain, and he finds real projects with tokens with incredible upside. And Eric's a unique thinker. For example, he's written a book entirely about a new way to organize labor and capital in America. Or another example, back in the 1990s, he bought the web address wallstreet.com for $7 and later sold it for $1 million. So that's just one unique story that really shows how Eric thinks. And it's this big picture mentality that helps Eric see the future of technology and of Bitcoin itself. So, Eric, I'm just going to start with the big question here. Bitcoin, risk asset or safe asset?
Thanks for having me, Matt. And I'm hearing great things about your show this week on Wall Street. And after that kind of an introduction and kind of a lead-in, I know why. You're packing a lot of good information into a nice, succinct presentation. So fantastic. And I'm very happy to be part of it.
I'm glad to hear that, Eric. I was worried you would. I didn't say very kind things about Bitcoin there, but I do like it. I think it's a great technology. I mean, we've talked about it for years, and you know how I feel. But I worry, this is YouTube, and I'm challenging Bitcoin's recent behavior, so I know people are going to jump on me. But yeah, so what do you think?
I'm going to go back to basics a little bit, or at least maybe for some of your viewers, it might come across that way. And I'm going to say the answer is both, but with a caveat. The safe is in Bitcoin terms. The risk is limited to just dollar terms. So let me explain what I mean by that. On the safe side, Bitcoin's an asset that you can self-custody. That means you can hold your own Bitcoin. You don't have to have them in an account somewhere. You're not limited to whether or not some other entity feels that you should be allowed to hold on to your Bitcoin. You can hold them forever if you wish. It's an asset with very limited supply and low inflation. You mentioned Bitcoin versus gold. Well, the market cap of gold is about 10 times the market cap of Bitcoin. So whatever gold is, you could say Bitcoin's like a small cap of that, right? So that could also help explain some of that volatility. But let's get back to that self-custody and kind of a unique thing about Bitcoin. That means typical erosion like fees and expenses, they don't slowly eat away at your Bitcoin. You're not having a management expense, for example. So in that sense, it's safe. However, and you kind of touched on this a few different ways, most of the time we call it volatility, etc. The number of dollars that you get for each Bitcoin you own, if you ever wanted to sell it, and not everybody does want to sell their Bitcoin, that fluctuates a lot. That makes you more dollars in a bull market, less dollars in a bear market. That's what I'm saying when I'm saying go back to basics. Everybody knows that. It's almost patently obvious. but sometimes we get caught up in the day-to-day instead of thinking the big picture on it, and that's where the risk comes in, obviously, but only in dollar terms in my mind.
Well, that's great. Yeah. So if you point out, I look at correlations, and I don't want to call them short term, but I look at how things move, day to day in a sense, just to see how they're related. But if you've owned Bitcoin for 5 years or so, yes, it's come down with the dollar now, but it still is protecting investors over a longer term. And, if Bitcoin is the end result here, if you're not worried about converting it into dollars, then yes, I mean, it does exactly what it's supposed to do.
Let me jump in real quick. Can I interrupt you for a second?
Please do.
You brought up the big correlation word, and it may surprise people. And actually, that's a brilliant analysis for Bitcoin. Might surprise people to know that a few years ago, our period of American health and investing history that a lot of us like to forget happened was the COVID years, right? A lot of people don't remember that the correlation between Bitcoin and pharmaceutical stocks during the COVID years was a very high correlation. Even though we all know Bitcoin is not a pharmaceutical stock, right? But the zeitgeist of America, of the world, caught the attention of, we got to roll out solutions, we got to roll out all of these new technologies under the pharmaceutical tech stocks, and Bitcoin was right there with it. Even though there's, in the real world, on the street, on the shelves, the products they offer, etc., zero correlation, but the prices were very highly correlated. So I think that also kind of taps into what you talked about in your opening, is that sometimes it's the investors that are highly correlated rather than the investments themselves.
And that's also what I mean by saying, Bitcoin's almost 20 years old now, but I think as an asset, we really only have about 5 years where you can say, oh, yes, we've studied it and this is how it works. A little more than 5, probably back to 2017. But the point is, we're still learning, right? And it's going to go through these changes, and it's going to move in different ways over time.
Fair point. Yeah.
All right. So, Eric, you're also really tuned into the crypto community. So what's the tone of that group now? Is it still like the anarcho-Austrians, or is it get-rich gamblers, or is the blockchain technologists? Like, who's got the lead in the movement today?
So, interestingly, right now I'm going to say it's the true believers. And by that, I mean the people who see the potential for blockchain to both disrupt and improve the whole technology industry, and Bitcoin specifically for it to catch up to gold as a store of value. I mentioned Bitcoin total market value right now is about 1/10 of that of gold. A lot of the people that are investing in Bitcoin right now see that upside. They see that they're going to that Bitcoin is going to catch up to gold. So that's a 10x for Bitcoin right now. Those true believers in the technology and in Bitcoin as a store of value, they also consider crypto as an industry, as a technology, kind of as a vote against everything that central banks and governments can manipulate. So the answer to your question, I would say then, is everybody has the lead. Individual investors, companies, states, even sovereign wealth funds, they're becoming true believers in Bitcoin's potential. And they're accumulating, backed by a very pro-Bitcoin presidential administration of Donald Trump. And you want that thick base layer of true believers, because the crypto space moves really, really fast and it attracts entrepreneurs. So yeah, among the crowd, you're going to get your get-rich-quicks and your startup investors. They're right now watching and looking for a small but sincere upward momentum to return to Bitcoin. And then they're going to pour more money into it and shift the tone away from fundamentals and away from Austrian economics, etc., and back towards super high growth rates, which is actually part of every 4-year crypto cycle that we've had, and can really drive prices higher as let's call it exciting crypto innovations start to catch people's imagination. Like the blue chip blockchain projects that we research and track in the Stansberry Innovation Report.
Yeah, and it's interesting. We used to hear every time a big bank or an institution was sort of branching out into crypto, And I feel like we don't hear about that anymore, but it's not, I don't think it's because they're not. I think it's because it's not news anymore. It's, oh yeah, of course they are. Like everybody's starting to get into this thing. So I think the growth is continuing at pace. It's just, it's happening kind of in the background. All right, but let me let you have the last word. Just for someone who wants to know the big takeaway for Bitcoin today, what would you tell them? Like, I know you're a Bitcoin believer, but is there a big bull case to be made for Bitcoin today? Or is this still just a more of a slow burn, long future thing?
I don't want people to feel like I'm not answering. This is going to sound squishy. Don't hate me, but yes and yes. Near term, okay. We are in a Bitcoin rally that analysis is showing it's heading towards $200,000 per Bitcoin this cycle. Now, day by day, it may not feel like that. You did a great job of pointing out that Bitcoin peaked over 100,000 and then dropped all the way back into the 70,000s. We have those kind of bear traps in every cycle of Bitcoin. If past cyclical patterns that we've established over the decade and a half that Bitcoin has been trading, if those patterns hold, then buying Bitcoin now should more than double your money within a year. Many other major cryptos, they could 5x, 10x, even more than that. And big picture global demand, that could push those speculative cryptos even higher than that. But long term, you're going to have to be able to ride out these ups and downs. Blockchain is a technology that solves real world problems, and it's going to grow like the internet did for decades. But there are going to be drawdowns in it. And it's not for the faint of heart. The offset to that, though, is it's a risk-reward calculation that you have to make, because if you can ride out that volatility, some of the tokens and coins that we're tracking could 20x or 50x or maybe even 100 times your money over the coming years. So if you have high risk tolerance and time to wait, you really could get both. The short-term rally of maybe double your money in the next year, and the longer-term rally as this technology just really changes the world. So the takeaway then is, and I'm going to plug a little bit for something that I contribute to, Stansberry Innovation Report. Read that, subscribe to it, and start building your portfolio, and then you'll get both. You'll get the short-term upside, and you'll get the long-term innovation changing the world.
Well, Eric, that's great. I know our readers are thrilled to have you help them navigate these crypto cycles. They tell me when we see them at conferences, and they send in the email. So we're glad to have you and folks at home at Stansberry Research. We do produce tons of free, high-quality research about Bitcoin, cryptos, markets, everything you need to know to grow your wealth, whatever may come. And you can sign up completely for free at stansberrydigest.com. And, of course, like and subscribe here on YouTube to stay up to date with all our market insights. That's all for today, and I will be back next week.